What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak. And today, my friends, we have a special little treat. First, I sound a little congested because I am. I don't know what's going on here. Little South Florida-ness getting all in my sinuses. Not quite sure what's going on. But hopefully that doesn't distract us too much from what we got going on. I already see Danny and Jim are here. So, hey, guys, how you doing? Tremblay, what's up, everybody? So this is what we're going to do. We are going, and again, you're going to have to excuse the grunts and the noises because I got something going on. I don't know what it is. So first, we're going to look at CarMax, and we're going to look at Bed Bath & Beyond. So what I've done here is I've got some software that I use intraday, real-time stuff going on here. So we can look at this. I don't like this software, so I'm not, hey David, how you doing? I'm not telling you guys to go out and buy this. This is Active Tick, and I kind of feel like a hater to come up here and say I don't like it. It's not that I don't like it. For what it is, it's good. I spend $20 a month on this thing. It's worth $20 a month, okay? To get real-time quotes, real-time options quotes, that kind of thing. It's the cheapest place I can find to get real-time quotes, okay? But there's limitations that I don't like, and it crashes a lot. So if it crashes while we're here today, that's just par for the course with this bad boy. So it is what it is. Anyway, so first, CarMax, right? Ticker KMX. This is this morning. So huge gap down. Rallies up, runs out of gas, comes back down. You see these kind of whipsaws early on in the morning, typically after earnings reports, because people are reacting to over hours, they're reacting to the report, and so on. What exactly was the report? So, and guys, this is I try and whenever I can, I want to show you something that's free that everybody can access very easily. So I literally just go to the Yahoo Finance page, and this is how I learn a lot of these, right? Later on in the day, I'll get earnings report, or I'll get an update, from the company or something like that, or an analyst is talking about it. But this is what I do. So they beat, right? We were looking for 79. They came in at 81. On revenues of $4.05 billion versus $3.97. So they beat on revs, they beat on EPS. $627 million profits, or $3.26 per share for the year. And yeah, okay, so we get that, right? Brief little blurb. If you want to get into it a little bit more, read whatever you want to read, right? For me, just kind of look at the headline numbers, see how the market's reacting. That's all I really need, right? We can make this as complicated as possible or as simple, and I prefer to keep it simple. So at the simplest level, CarMax beat, right? So we're expecting CarMax to creep on up. Now I was looking back at my notes on CarMax, and we were short the 55, 52, 50 put spread for a 105 net credit, right? That's the April 21st. That was the bullish case that I went with here on CarMax. So we see what the stock is doing, and the other thing I like to do is, go out to the regular daily chart, get a little bit of a perspective. What happened yesterday? So already today we've taken out the lows and reversed higher, but we're stalling out a little bit here, right? So it's early on in the day. It's only 9 o'clock, but what you can do is you can give yourself a couple key levels to look for. And you can keep these key levels throughout the course of the day. So essentially 58 looks like the top of yesterday, and I'm sure you can get a more detailed, you can get more details on specifically what this is. But it looks like the high was 58.05. Okay, so 58.05 was the high of the day yesterday. So look for 58.05. If it could take out 58.05, then the thing is gonna march higher. So that's something to keep in mind for any of the guys that put on any lotto ticket kind of thing. Okay, so you want to watch for that. But for the rest of us, if you just did the bullish trade, that 55 level is what we were looking for. Let's see sort of the immediate market reaction, what it was. So here's CarMax. Oh, this is BlackBerry. Or not BlackBerry, but rather Bed Bath & Beyond. Here's the CarMax chain here. April 21st. And we were talking about the 55, 52.50 put spread. So you'll see right off the bat, and these are real-time quotes, so you can see this. CarMax, $55 put right now is 75 by a buck. And the 52.50 put is 20 by 60. So this is essentially 40 cents and then what, 87? So 70, it's trading like what, 45 cents, right? Now, we put this on for a 105 net credit. If you want to, you could immediately close this position out, right? You can close it out right now, and you're going to pocket the difference between the 105 and the 45. 105 minus the 45, boom, 60 cents. So you could take your profit of 60 cents, you can close it out, and you can run and forget about it, right? Or the other alternative is you stick around for another couple of weeks until expiration. So what you're risking then is you're risking that 105 that you had as a net credit, and you are essentially hoping that shares of CarMax can stay above this $55 level, right? Now, on a decent earnings report like this, and these rallied a little bit, this is what you have, right? This is what you have. So, Danny, I see you talking about the 55, 57, 50. I'm assuming you're talking about a long call spread that you were looking at. So let's just look at what that's at, right? Since we're here. Since I'm getting a little bit of participation from you guys, thanks. So let's look at what the 55, 57, 50 is. Let's see where that's at right now. Wide spread on this 55. Look at this. 170 by 3. That's a huge spread, okay? You got a 110 net credit on that. Okay. So at 170, what you're hoping is that you can sell this for 220, right? The 55 for 220. And then this one, 135. So 220 by 135. So 220 minus 135. So right now it's at 85 cents. Danny, you're confusing me, though, because you're talking net credit. This should be a net debit if you were long this call spread, or will you short this call spread? You got to let me know if you're long or short this call spread. Because if you're showing the credit, it makes it seem like you're short, my friend. Anyway. So, that's what we're looking at here on CarMax. So if you listen to me, I say you just chill, right? And we're going to talk about this later. Okay, so the put short. Oh, you did the 55, 57, 50 put short. Okay, let's look at this. 57, 50 and the 55 put short. Okay, now we're talking. So 170 by 250, so 80, so 40, so 210. So 210, and then 85, right? So 210 minus 85. So $1.25. So right now you're in the red a little bit on that one. But you just need shares of CarMax to get up above this 57.50 level. And looking at the chart, obviously this could happen very easily. So if I were you, Danny Boy, I would wait a little bit. Sorry if I called you Danny Boy. I hope nobody's offended when I give them nicknames. It's just kind of what I do. I'm always giving people nicknames. So anyway, so 57.50 obviously could happen. I would just wait a little bit. We're going to talk about this in the good, the bad, and the ugly today. When you see a move and it starts to go in your favor, you definitely just let it ride. And most of the time on these credit spreads, you do want to just let it ride because time is on your side, and you just want to let it, you just want to sit back, relax, and see what happens, okay? Because you already know, you've clearly defined what your risk is, clearly defined your upside potential. So you don't need to get too cute on it, right? You don't need to get too cute. Okay, so there's CarMax. And again, this is what we're going to talk about later, too, in the good, the bad, and the ugly review that I send out a little bit later. All right, so now this one, on the other hand, Bed Bath & Beyond. Remember what we were talking about in the during the show on this? And that was, we got to keep being negative on it until it does something to show us positive. And when it does break positive, it's going to break in a big way, right? So it looks like it has broken positive in a big way early on, which obviously doesn't help our cause because we were bearish on Bed Bath & Beyond. Going long the 39.3750 put spread for a 65-cent net debit, right? I believe we were bearish on that. April 21st expiration. So long the 39.3750s for a 65-cent net debit. That was on Bed Bath & Beyond. And we got a huge spike up initially, right? So what do you do with something like this? Well, first, let's assess the damage, right? So here we are in the Bed Bath & Beyond chart. Oh, sorry, guys. This is my note. This thing is killing me today. You can already hear it. I got a frog in my throat. All right, so long 39.3750s. So here's the 39, and obviously these are going to be taking a punch right away on the bearish side. 33 by 39. And then the 37.50s are going 10 by 17, right? So now here's 34 by 39. So basically you can get 37 and do 5. So 25 cents is basically what you could get these back for right now, right? Typically, if these go against you real quick and you could rip it quick, I say you go ahead and do it, right? This only costs us 65 cents to put on initially. So if we take a 50% hit here, it's not the end of the world, right? Because it was so cheap to put on. So if I'm looking at this, you know, I gave it a chance. I hope that it might have reversed a little bit. So here's one thing though on this chart, right? You have this big gap up to 39 and change. It's very tempting for me to take a look at this and say, okay, well, it rallies up here, maybe that's it, and it runs out of gas and it retests the bottom of this low. And then that's 39.25, and then we're getting pretty close to, you know, at least one end of our put spread. And we do have all the way until, you know, April 21st for this thing to turn around, right? So that's why early on, we have a little bit of time here. Not a lot of bit of time, though. So it depends on the type of options trader that you are. So I know a lot of people that would take this, rip it right away, just go, I'm wrong, rip it, done, right? But just given the nature of these, and this is a stock that has been beat up a lot, right? So you gotta, even though there are shorts that are running and that are covering right now, you know, that's people that were betting against this stock that were short and now have to buy it to go ahead and cover their short position because it's coming higher. You have a lot of people doing that, and that is part of the reason why you had this big gap up. But what we know about gaps is that gaps have a tendency to get filled. So at the very least, I think that shares of Bed Bath & Beyond are going to come down and retest this 39.23 level, right? I think it's going to happen. So I think personally, if I'm long these 39, 37.50s, I want to at least wait for that to happen because I might be able to get almost everything back on that 65 cents if that does happen. I mean, even now already while we're talking, one of these has gone off at 40. One of the 39s have gone off on 40. And then you got 17, so that's 23 right there. So these numbers are obviously going to change while we're talking, but that's kind of what I'd be looking for. Because what happened to Bed Bath & Beyond? Was it like the most spectacular quarter in the history of the world, or was it just not as crappy as people thought it was going to be? Let's see. Of course, they send us to the street. 187 per share. We were looking for 177. Same store sales grew 0.4%. Look at this, though. The company did note, however, that it's expecting profit for the year to decline. Well, that's interesting. What else do we have here on Bed Bath & Beyond? Look at this. Earnings beat held back by weak guidance. So when Bed Bath & Beyond reported, yeah, that's right, David, not as crappy. When Bed Bath & Beyond reported Q4, 1.8, we knew this, 3.5 in revs versus, and we were looking for what, we were looking for a little, yeah, 3.5 even, right? Yeah. So, but look at this, guidance, increase, comp sales, flattish. Okay. So, when you start to read through these headlines and see what exactly is happening, not as crappy and shorts covering. That's what I think we have going on here early on. So, I think for me, I'm going to be a little bit patient with this. I want to see what happens, right? And that's why when we put on these call spreads or put spreads, we actually, time is, again, because we're buying the time with the long side, but we're selling it on the short side, it's actually okay for us to stick around a little bit and see, right? Obviously, the further out of the money you get, the worse off it is, okay? If we were way out of the money, then it's going to evaporate a lot quicker versus being close to the money. Is this the wrong? Which strike is this? I gotta make sure we're on the right strike on these blackberries. Oh yeah, April 21. Or I keep saying blackberry because all the B's and Y's. You guys know what I'm talking about. Bed Bath & Beyond. I'm just keeping an eye on these things moving around a lot. All right. Yeah, so I say we let them ride, and just kind of see what happens. Now, did anybody take the bullish case on Bed Bath & Beyond? I'm just wondering if anybody took anybody take the bullish case? Anyone take the bull case on BBBY? Because again, guys, you don't have to agree with me, right? I'm just kind of putting my analysis forth. Obviously, I get it wrong. You guys have seen me get it wrong 100 times. Get it right sometimes, though, right? And if you cash in to the upside big time when you're right, over time it's gonna work out for you in a positive. But I just want to see if nobody took the bullish case, huh? I try not to be so compelling, right, that I swayed you guys if you are in fact, feeling one way or the other, if you have a gut feeling. That's not my intention at all. I'm just trying to look at it and give you my feeling of what it looks like, based on my experience trading these and what I've seen. And you just kind of see what happens, right? So you don't have to agree with me. That's why I give the bullish case and the bearish case, because I want to give everybody an idea for what they can possibly do, okay? Okay, so there we go. Now, let's do a quick little, let's look into the stock that we're talking about tomorrow real quickly. Fastenal. And again, hope this thing doesn't crash. So Fastenal, I think, is going to be interesting because you've got this consolidation period basically since January that's been happening. Little bit of an upward bias on the consolidation. But, when these stocks are kind of lingering here in these ranges, they need something to break them out in one direction or the other. They need something to compel them to go quickly. And Fastenal, I think, is looking for that, impetus. So down below 50, it's going to be ugly, or 49.5, it's ugly, and then up above 52 and change, 52 and 3/4 is going to be awesome. Let's look at Sears real quick. You guys know I love to hate on Sears, right? So this is my thought with Sears. Look at that. This bad boy is gone. They've doubled off the lows, off the bottom. Sears in a nutshell. They're dying. They've been dying for a long time, and they will continue to be dying on the retail end because they're in terrible malls. They're not in, so I'm down here in North Miami, so we have Ball Harbor, which is like this super luxury mall with, Fendi and Valentino and all these crazy things. Then you have Aventura, that is, again, it's a great mall. There's a Louis Vuitton store in there. They've got all sorts of fancy stuff. But then you have like these inland malls that are kind of out in the middle of nowhere that, nobody goes to. There's no reason to go there. And those are where you find the Sears. Back home in Chicago, there's a Sears at Golf Mill Mall. Now, I don't know if anybody's familiar with the Chicagoland area, but Golf Mill's out in Niles. It's kind of, like, it's a pseudo-busy area, but, yeah, who's going out there, right? And then now with the availability of, online stuff, you can get whatever you need in a couple of days, and what does it matter? And then Sears specifically has been so eviscerated by competition. It's like, I've gone to Sears to buy tools, but the tool section at Sears is like, 400 square feet, 800 square feet. I can go to Home Depot and the whole thing is tools, right? So the competition there started to eat them up. And then, what else is Sears specific that I can't just go somewhere else for and get it? I guess the allure of Sears was back in the day, you had everything under one roof and it was right there. We don't need that anymore, right? You need a reason to go to these retailers. Anyway. So then Eddie Lampert comes in, right? Eddie Lampert's coming in. So this is the thing. Eddie Lampert is a finance guy. He's a numbers guy. He's been a numbers guy. He's not there to turn Sears around. He's there to cut Sears into bite-sized pieces to maximize shareholder value. That's what he's there to do. So one thing that I've heard from Sears, from the Sears bulls that are out there, there's not a lot of them, is that it needs to just become a REIT, because the actual real estate that these Sears locations are on, that's where the money is, okay? I'm going to call baloney on that one, because you are valuing these things with the current mall and all of that. I think it's going to be a lot cheaper than you think. Yeah, Sears closes all over the place. I've seen more Sears closings. I've personally been to Sears like liquidation sales like many times. So I think that Sears is going to be a REIT somehow, and that's where they think they're going to make some money. Okay. So I don't know. You'd really have to dig into the valuation of what you think that REIT is. But I'm not buying it. Dead cat bounce, absolutely. I think the way to play Sears. Okay, guys, now I'm going to try and pull up this options chain, and if it blows up, you don't get to laugh at me, because it's not my computer. Trust me, it's this stupid program that blows up all the time. So let's see. Come on, don't blow up. It's going to blow up. Oh, it didn't blow up. What do you know? If I'm trading Sears, I go far. Right? You can go out, just think about another cycle, right? Just like another cycle of earnings, another cycle of whatever. I went on Bloomberg in December, and I think I gave the 12-7 put spread, something like that, and they all thought I was nuts, and then it ended up working out. It was a March put spread that I put on, 12-7. Yeah, so I mean, literally, you could go out to January. Here I'm just looking June. But let's even look at what this January 2018. So these are leaps. A 13.5, right? Or 13.8. So what does a 13.8 look like? So it's 625 by 655 right now, right? So 640. You could buy the $13 put for. You could sell the $8 put for what? What is that? 285 minus 285. So that's $335 that one's going to cost you. So you can't even double on that. That's not even the play. That's not even the play though, because there's only $5. The difference in strike price is only $5, guys. So you're not even going to double your money. I mean, I feel like I want better, right? I feel like I want better. What else? Let's see. The 10.8 maybe. You do the 10.8. If you're really bearish on this thing, there's nothing wrong with this 5, right? You can go all the way down to that $5 put if you wanted to. The math would look a little bit better. So you go a little bit out of the money, I guess. This is the way to go. something like this, even this. See? Look at you know how I know Sears is in trouble, guys? Let's look at the call side, right? So the $10 call that's in the money right now by what? $1.50? So you're $1.50 in the money and you're 8 months out and you're $2.30 is essentially what the $10 call is trading at, right? So $1.30 of that's intrinsic value, so you're only paying $1. Whereas the $10 put, which is out of the money by $1.50, is $4. Okay, that should tell you a lot about how people feel about Sears. All right, so we've got some questions about Lulu coming in. Don't I have a? Did I close the chart? Oh, I closed the chart. Let me pull this chart up again. Lulu. Let's look at Lulu. And again, this is not my favorite charting software, but it gives me real time, so I like it, right? Well, Lulu, and then we'll talk about Amazon, okay? Because we got some time, guys. Full disclosure, I'm keeping my eye on oil while we're messing around with this. I'll show you guys what I got going on. See? Keeping my eye on oil while all of this is happening. Oil's been rallying a little bit. I got caught with my pants down yesterday. Silly rookie mistake ahead of that inventory, so that was no good. Anyway, back to Lulu. Wow, Lulu's at 50? Holy smokes. Wowzers. Look at that. Running out of gas. That's incredible. Bounce to 55 or lower lows. So again, gaps at least got to get tested. They've got to at least test this 52.98. I mean, 50. Let's call it 53. It's got to happen. Yeah, Kurt, we already talked KMX. We're celebrating the KMX. So Lulu, watch, man, did they do that in those old cartoons where it was like, watch that first step, it's a Lulu? Yeah, that's what happened to Lululemon. That first step was a Lulu. So 53s, I think, is what you got to look for here. Let me get my some of my studies in here. So commodity channel index is a big favorite of mine. I love to use it. The way you trade this is you got to have the zero line. This software is not my favorite. The zero line has, let me put the objects. I got to put a zero line here. Can I put a line? Just a line? There we go. Oh, no, won't let me do it. Anyway, so as long as the commodity channel index is above the zero line, then it's in a bullish trend. Below the zero line is a bearish trend. What you wait for is you want it to go below negative 100 and then cross back above the zero line, right? So here you've got the commodity channel index at negative 60. Let's see how this rally in Lulu goes. I would be, I think I'd be surprised if it got above this $53 level. Okay, so Lulu's kind of beat up. Is what I'm looking at. Yeah, the Crocs of 2017. It was ugly. I think Lulu's going to offer us a lot of opportunities to trade because it's a very hotly contested area right now, and athleisure wear. But is that trend dying? I don't. Again, guys, I'm down. I don't know how many people are walking around in those yoga pants anymore. It was like everybody was doing it. I think it was a little bit of a fad, and yeah, maybe now it's done. Maybe it's done. All right, what else were we looking at? Amazon. I think I saw somebody asking Amazon. Oh, wow, man, look at Amazon. Here's a nice little thing that you guys can do. A little trick. Big fan of the fib retracements, okay? So just from this recent move, this recent low. Oh, come on. Again, this is like my least favorite piece of software to use because everything's just so clunky. So clunky. All right. There we go. So now we've got some retracement levels. And you'll see, so this is just from the move, just this last week, right? Looking for support kind of in 877s. So I'd be a buyer sort of 877-ish. So there's that. And then if we move to the big fib, then you're talking 820s pretty much, right? The first step being over here. So there's that. Get out of here. Delete. Okay. So Amazon's just going to keep on trucking. It's going to be $1,000, right? And we're all going to freak out. Because it's just going nuts. It just wants to go higher. It just wants to go higher. Okay. What else are we looking at, guys? Amazon. Looking through here. Oh, here's a question. When I give my risk stars, how am I assessing it? And what do these things kind of say? All right, well, so I guess when I'm talking about these risk stars, first of all, in the grand scheme of risk, options trading is highly risky, right? And what I mean by risk in this case is the odds of losing money, okay? The chances of success versus the chances for failure. And part of the reason because that is how you define the chance of success or a chance of failure. So what I mean by that is if I'm sitting back and I'm investing in stocks and I put $100 shares of XYZ and I buy it today and I don't assess my situation until 30 years from now and then I say, oh, okay, I won or I lost, right? Because that decision point is so far away in the future, I have so much opportunity between now and then to rip it for a gain and win, right? Whereas with options, you have a clear-cut deadline for when you need to make that decision. So that adds that inherent risk. And then we also know that with these options is that, 80% of them expire worthless, right? So specifically, if you're on the long end of these options, you're in trouble, okay? Overall, just in the math side of things, right? So that's kind of what my first initial disclaimer is that options trading in general is a lot riskier. And then I'm just going the risks of those options. So it's like you're already a black belt in karate, but what degree black belt are you? So when I do a 5-star risk thing, those are those lotto tickets, and I'm like, I think that, this has a high chance of just putting out on us, right? And then, a 4-star risk is something where we are long a out of the money or long a very aggressive long call spread or put spread. The 3-star would be where we're long a call spread or put spread, but it's not as aggressive. So instead of saying, yes, I'm going to go with exactly what the market is pricing in, the options market is pricing in, I'm going to do half of what the options market is pricing in, right? So there's that. Then 2 stars would be kind of that at the money call or put spread that we're short, right? And then that 1 star would be an out of the money short call or put spread, right? So that's kind of how it goes. But then you have individual companies where, they're right at the precipice and it's a high beta company and it's like, okay, it could go this way, it could go that way, I don't know, right? So that's kind of all what gets thrown into the thing when I'm talking about what this risk kind of looks like, okay? All right, so I'm now let's look at Apple real quick. I'm just kind of going down, so thanks, Mr. Wallace. I'm just kind of going down these questions, guys, as you're putting them in. Apple has been surprising to me, okay? And you know what I'm going to do here? I'm going to pull an audible, and I'm going to get out of just this. I can't keep looking at these stupid charts. This is just not going to happen for me. So we're going to go to my, by the way, guys, cheer that crude is breaking out here a little bit. I've been long crude. Anyway, so now I think I can put up AAPL, and this is going to look a lot nicer for us. Yes, of course it does. All right. So this software, guys, this is called NinjaTrader. NinjaTrader is free for the world, so that's great. But it's tricky because you don't automatically get the data feed unless you get this, what they call the Connect Tick end of day data feed for free, right? So you do get that. that you can mess around with. So, and then there's a lot to learn here. It's a very complicated product. I don't even want to get into it right now, but long story short, I like it and it's easy to use. Apple on a heck of a run from the 104s all the way up to here. Okay, now you might look at Apple and think like, oh, this is great. Look at how it's been charging higher and all the above. Why is Apple moving so much higher? Think about this, my friends. The NASDAQ. Look familiar, right? So I think it's just overall tech rallying, and then we can even see what the NASDAQ's doing right now. Overall tech is on the move, and this is what's happening as a result, right? NASDAQ charging higher, and that's what we're getting sort of across the board. So the Apple story, there's a lot of risk there. We got to see what's happening out of this administration. Are they really going to do some kind of border import tax tariff thing, or is this just a bunch of hot air? We're not sure. So I don't know. I'm in the grand scheme of risk on Apple. I think Apple's riskier today than it has been in the past, and I think there's other things to look at. All right, so here's a kind of a loaded question. Who's going to be worse, Whole Foods, Sam Adams, or Fossil? Should I do the Zaxi answer or just the technical answer? So I guess first let's just look technicals. That's what, WFM, and then isn't Sam Adams beer? Isn't that the ticker for Sam Adams? Okay, so WFM. This is Whole Foods. We've never covered Whole Foods, have we? Maybe somebody needs to remind me to do Whole Foods next time Whole Foods has their earnings report. Aaron, actually, that is your task, sir. If you could remind me when Whole Foods is coming up so that we could talk Whole Foods, because I don't know that we've ever done a Whole Foods earnings show. I'm waiting for Zach's. Of course, Zach's is going to take forever, right? Everything else is going to go. Oh, yeah, it's Sam. That's right. It's Sam. It's Sam? I thought it was beer. Huh. Anyway, waiting for Zach's to load up here. What? It would be the Zach site that's taking. Come on, guys, let's go. All right. I don't know why, but sometimes Zach's. I guess it's because we have so much stuff on this homepage that sometimes it takes a while for our Zach's page to load up for me. Okay, so what does Zach say about Whole Foods? There's a sell. And guys, these ratings are not based, it's not a bunch of us in a room going, okay, I think it's a sell. No, it's not how it works. They aggregate all the other analysts' data, and then they compare that to other stocks and how other stocks' data is. So it's like a peer review of what the analysts have been saying about you. Lots of negativity here. Look at this. Negativity. Ugh, Whole Foods. But they're trying. So they're bouncing. They're being resilient here. Being resilient there. Sam Adams, the craft brews are eating up this beer market, aren't they? All these hipsters out there drinking their craft brews, their IPAs. Again, lots of negativity here. I'd say there's more room for negativity here in Sam than there is in Whole Foods right off the bat. And then the Fossil. Oh, a 5. Ooh, boy. That's ugly, too. I don't know. That's hideous. 114 down to 16. Woof. Anyway, overall, which one of these? I think Sam, actually. Sam Adams looks like it's got the more downside potential. Will McDonald's hold 130? That's a technical question. Let's look at the technical chart. McDonald's. I know they're starting to unroll this like, oh, hey, we're not going to have frozen beef everywhere. We might actually give you guys some decent beef. Now, on occasion, man, I've bought McDonald's down in the 70s and ridden it for a while. And then when that new CEO, they had that new CEO that came in, sold it. And McDonald's dumped. They lost like $1 billion in market cap in one day. Or they gained. I'm sorry, they gained $1 billion in market cap like the day that CEO, not the CEO, but the CEO before, when he left, everything went skyrocketing higher. I think I did a trending stocks piece about it. I mean, this is solid. McDonald's is pretty solid. Don't they pay a healthy kind of dividend too right now? Give them a chance for their turnaround, I think, and just be patient with McDonald's. That's typically it works out over the long run, as long as there's no scandal or people kind of like, the overall direction of where things are going. And look at this, yeah, you got analysts like what's happening at McDonald's. Here's where you had that problem. Now it's turned around. Now you've got growth. That's a good chart there for McDonald's. So that's why the stock's up there. So that's decent. This is good. Any chance Tesla will hit 350? Don't ever bet against. I just can't keep. I can't keep them out. I can't bet against. You don't bet the jockey. I mean, you don't bet the horse. You bet the jockey. And in that case, that's a pretty darn good jockey over there. In terms of Elon Musk. Pre-market. Come on, what do you give me pre-market for? Anyway. So I still, yes, there's a chance it goes to 350. There's a chance the thing just keeps flying and just keeps going, right? It just keeps going. Crude breaking out. So we could talk crude. This has been I've been talking about this in my little Dave's Daily Dive thing, and you guys don't need to follow that. That's something I'm kind of doing for Zacks, right? But in the beginning, I do talk about all the different markets and such. So for a while there, crude looked like we were going to just keep on trucking. Now, crude has a tendency to trend. So it'll move in one direction. So here you go, from June 2016 to the beginning of August. And then it trends in a different direction. And then it trends. But it will go one way or another for a while, and then it'll consolidate for a few months. So we've got a big dip from the 55s down to 47. Yesterday was gnarly, man. We were rallying up, looked like we were breaking out to the upside, and then this inventory report came in, and they just submarined that thing. But then it bottomed out in the Asian session and has been rocketing higher ever since, right? So I think we can retest this level, and we'll see what happens. I got to stay nimble in crude today, though, because I don't want to lose my shirt like I did yesterday. That was a frustrating experience. Not fun. Not fun at all. Well, hopefully somebody made some money on something. My buddy made a ton of money yesterday in crude. I just got slapped. I made a rookie mistake. I'm almost embarrassed about it. Anyway, but the question about crude was if it, can it keep going higher? And yeah, absolutely. I think it goes to the mid-50s because it's got to just retest these levels. Let's go back to the daily chart and see if we get this. 50s, 55s right here. I think you can get back up there easily, right? And I drew some fibs here. But this is going to get broken, I think, this 51.3. And then now we can put our extensions on this. Did I do it the right way? 23? Yeah. Okay. So then in this case, it's going to be negative 23.6. So we're going to add that. And then negative 38.2. Okay. Apply those. So you'll see some short-term targets we have here, basically 53s. But you also have some big fibs here from this high down to this low that you got to be cognizant of. So 53, 52.32, which also corresponds to this low here on February 8th. So that's good. That's a target. That's today's target for me right now. 52.31 is where I'm looking for in crude. Yeah, Kurt, these are crude futures right now that I'm looking at. So Zacks rank number 1 momentum stocks that get heavily sold off. So in addition to Live Trader, I am the momentum stock guru at Zacks. Basically because a lot of these momentum stocks trade purely off of technicals. So since I'm like the technical guru, I get roped into this stuff, right? So on a stock like Applied Optoelectronics, let's just look at it. Let's look at it so I'm not spouting off nonsense so you can actually see. So again, what you got to do here is you got to ask yourself, why is this happening? Okay, first and foremost, why is this happening? And where does it stop? So where it stops, get your fib levels out. So it's already broken the 38.2 fib, so that means the 50 fib. So you got to look for 41.07. Huge volume today though, right? So let's see what happens if it stalls out here. This could potentially be an area of reversal. So I would look intraday to see if this closes near that level, and then you could go ahead and buy it again. But the thing about momentum stocks is like they go up until they stop going up, right? So I know that sounds funny, but this has already broken this trend line 2 days ago. So if I were trading this thing, I would have sold it already. I know that's easy to say right after the fact, but that's where you're supposed to dump it. Now you just got to kind of get out of the way and allow it, to do what it's going to do. Don't try to catch a falling knife because you'll wind up with no fingers. CHK. Let's look at, was that Chesapeake? Bounce off the lows. Little bounce off the lows. Ugh. I don't know, man. That's heavy. That looks heavy to me. Where do we have it? CHK. And if you're looking at stocks on Zacks, by far, the price consensus and EPS surprise chart tells you so much information in such a little. Look at that. See? This looks like a turnaround to me. Kind of the earnings keep getting nasty. Now they troughed, and that looks good. Oh, I skipped AMD. That's right. So Chesapeake, I kind of like that. Turning around. AMD. So AMD had such a great quarter that was like Q3 earnings, during the Q3 earnings, and rocketed higher. But remember, this is a stock that was like a $2 stock, so you guys are getting greedy on AMD. Now AMD also just started to track kind of with what NVIDIA was doing. I love NVIDIA. I love AMD. I love all these companies. But I think right now, the cat's out of the bag. So before, these companies were kind of secret. You had to kind of be in the know and paying attention to that. And then they became in vogue. And everybody, and Kramer wanted to start talking about it. And then everybody started talking about it. And that's when it gets a little top heavy, right? When these guys are all talking about it, that's when you got to kind of be careful, reassess the situation, take a step back. And then, get back. I like to, because once they get into that glamour stock category, then you're in trouble, right? So when everybody wants to start talking about them, that's when things, because just like the bulls are talking about them, the bears are talking about them too. So it's an opportunity for the shorts to get in and start slamming stuff. So you got to be careful. And then, so these blue chips are starting to pulling back a little bit. One thing I want to talk about these blue chips, and I'm going to use the ES to do it. So this is the S&P 500 E-mini chart. Here's, the pre-election day lows to the highs. This 50-day moving average has held relatively well. And what I've seen happen during the day on a lot of these trading days is the market will come down, test the Globex low, in many cases go a few ticks below the Globex low, and then surge higher for the remainder of the day. So that's a strong market. That's a bullish market. And the other thing here is if you're trying to compel me to be bearish on this market, you're going to have to force it down. Not this little, selling near the high, like another high, a lower high put in, and we're going to go a little bit lower, and the market's still at 2,300 and change, right? I mean, we're still way off of the lows. We haven't even come close to retesting. 2235 is the 50% retracement of the move from election day. That's a long way away right now, and it's going to continue to be a long way away right now, unless you get bad news on the policy front. So yesterday we had that bad news on the policy front because Speaker Ryan came out and said, oh, the House, the Senate, and the White House aren't even close to being on the same page when it comes to this tax reform thing. That's not good. The whole market is waiting for tax reform. Now, the good news is that these EPS numbers, if you're looking for Q1 of this year right now, they're supposed to be good. So this next earnings report here, it's supposed to be fantastic. EPS is supposed to grow significantly, and that's supposed to continue on throughout the course of the year. If you guys don't read my boss's stuff, I read my boss's stuff. And not because my boss makes me read my boss's stuff, but because everybody should read my boss's stuff. Let me pull up the homepage here on Zacks. Shiraz Mian. And just for the data that Shiraz has in there, it's fantastic. Because what he does is he aggregates EPS data for all the different quarters and spells it out for you so you can see what the market is expecting out of earnings season. And he breaks it down quarter by quarter. He always has his smiling face down here at the bottom. There's Shiraz. So you click on this. I think he does this once a week. You know, you don't have to look at it every single week, right? You just kind of casually when you wanna find some numbers, you look at it, and that's what I do. So he's got the number of companies reporting. So we'll see, next week only 8 out of the S&P 500. Then we got 76. It really kicks off, and then 188, 144. Then it gets nuts. Okay, so expectations for Q1. Q1 earnings expected to be up 6.5% on earnings of 6.4. Get out of here, virus protection. So here's the evolution of Q1 earnings. So it always starts a lot higher where we think we're going to get 10%, and then it settles down to 6%. And then this will trough, and then it actually tick back up as these companies are reporting. So here's the aggregate data again, 6.5%. Last quarter we did 7.4, just so you have that. And then here's what we've seen in the past. So we had an earnings recession from the second half of 2015 on through the second half of 2016. So earnings were actually contracting on the S&P. Third quarter, we had earnings growth 3.9%, 7.4. Now we're looking at 6.5. Beyond Q1, this is the cool part. So Q1's looking at 6.5, Q2 7.8, then 7, then 10. Now, granted, these numbers are going to come down a little bit, but the point is we're still looking at really nice earnings growth on the S&P 500 moving forward. So as long as the S&P can keep on giving us that earnings growth, I think things are going to be good for the market. Now, this is without any sort of tax cuts or anything out of the Trump administration. If we can get tax cuts, that's going to be a huge boost in the arm of these numbers, and the rally is going to be bonkers. And that's why the market is already pricing a lot of that in, because we're not patient. So this is the market inflating, expecting these tax cuts, and these numbers pushing higher. But if you'll notice, this is what? 2070 up to 2400. Uh, 15%, right? So basically the market's rallied 15%. But we've already saw the Q4 earnings are going to be 7% of that or 6.5% of that, right? And then how much benefit are we going to get from a tax cut? So the market has undoubtedly already priced in a few percentage points of that tax cut. They haven't priced it all in. And aside from just the actual benefit of the tax cut, you don't know what's going to happen after that, okay? All right, guys. So I think this was a solid little question and answer session. And I think I need to get back to paying attention to what's happening in oil because I'm watching my profits evaporate right now, which is fine. But more importantly, I think I need to find a Claritin because I sound terrible. So I'm going to try and get my life together ahead of the good, the bad, and the ugly review that we're going to do later on today. So I want to thank everybody so much for coming out and bearing with me and asking the questions. Awesome. Jim, I just saw MODN. I'm bullish. It's in my home run investor. I like it. I like MODN. Anyway, so thanks everybody for coming out and shooting me the questions. I couldn't have done it without you. And I think we'll do this again in the future, although I'm not sure exactly when we're going to do it, but we'll do it. I'd like to make this a little bit more of a regular thing for everybody. And I'll send you those emails once I get them a little bit later on, and we will go from there. All right, guys? So thank you so much for hanging out with me here today. And I will see you all later and tomorrow for Fast and All. Have a good one.